Next situation we're going to talk about, and Nerina mentioned this, a lot of people talking about the financials on a local basis being undervalued. A lot of the banks looking cheap. So instead of buying into one bank and taking the risk of that specific bank situation, you can buy into an index and take advantage of this value that's possibly being offered. So the first one we're going to discuss is the Satrix FINI. Nerina, so I'm going to bring you in here. I'm very interested to see the underlying stocks here. Yeah. So Old Mutual is a massive position, but there are other, property companies as well as Brait and Growth Point, and so it's quite a mixed. I guess FINI might be a bit misleading.
Well, no, I think FINI is not misleading. It is really that what people think of financials when they hear the word FINI or financials, and thinking that it's only banks. But of course it's banks. It is life insurance. It is short-term insurance. It's financial services. And at the moment still it is listed property or real estate as well. So there is a move amongst many of the global global index providers to actually strip real estate or property out into its own separate class. But for now, globally, real estate or listed property, REITs, are considered part of your financial index. So in South Africa's case, yes, it is a nice mixed bag, and I think it does give you the opportunity also to say, do I only want to be invested in banks, or do I want to be invested in a broader financial services sort of spectrum, which is what the FINI 15 will give you.
And do you feel that banks or financial services in general are undervalued at the moment in South African context?
I do think in the South African context, and I think in particular the South African side of it, and maybe not just the South African banks, but definitely also the South African insurance companies. They've certainly felt the global contagion of the fallout of Brexit. But I think when you look at not just the operational sort of efficiency and success of South African financial organizations, but also the capital soundness and where they stand. You hear a lot of people saying that, is this 2008 again? Are we going to get the same sort of turmoil? And I'm not of the belief that we are, because especially the financial industry globally is in a much stronger position now than it was in 2008. So when I look at where the dividend yields of many of our banks and insurance companies sit, and of course also our real estate, they're always good dividend payers. When I look at that, I say to myself, once again, on a relative basis, this represents for me a much better investment opportunity than maybe some of those very lofty industrial shares which have sort of run very hard on rand weakness, but now are at very stretched valuations.
Okay, so I'm going to bring in the next one, which is the GIVI FIN.
Yes.
So we can sort of compare the two, because they are sort of got the same sort of mandate, but a few different underlying shares, and it's done by a different company, huh?
Yes. So both financials, but that's about where the comparison ends. So the Satrix FINI 15 ETF tracks a FTSE JSE index, which is the top 15 financial companies on the JSE. The NewFunds GIVI Financial Index, or ETF, tracks the S&P GIVI SA Financial Index. And the big difference between those two, even though they both track South African financial companies, is GIVI is an acronym that stands for Global Intrinsic Value Index. So what S&P does in the construction of that index is to combine two forms of more sort of active, if I may call it that, or more value sort of definitions. There is an intrinsic value component which drives the exposure and the weighting, but they also pick stocks that are less volatile, so they've got a volatility screen on this as well. And that is why your underlying, not just the actual individual stocks that you've got in there, but more particularly the weighting that you've got in there, looks very, very different. And interestingly enough, when you go and look at the underlying stocks within the NewFunds SA, the GIVI FIN ETF, you find that 25%, close to it, of that index is just Capital and Counties and Intuit Property. So those two big UK listed property companies, 25% of that ETF. And then you've got a further 35% from Old Mutual and Vestact. So 60% of that actually has got a lot more to do with the UK and with the UK financial and property market than it does with South Africa. So it's so important in ETFs that one understands what's underlying, what's under the hood. Do an X-ray, have a look at the fact sheets, look at the indices, look at the ETFs, and understand what are you actually buying in terms of that underlying basket.
Agreed, 100%. You definitely have to look at the underlying
Yes.
assets, because that's what moves the price at the end of the day. Yeah.
Absolutely.
I just want to touch on, again, looking at financial services in general and the valuation, because we're talking about whether they're undervalued or not.
Yes.
When Brexit was announced, it was the UK, or actually European in general, banks
Yes.
which took the most heat.
Yes.
So they are very sensitive to this kind of news, and I guess that's why they trade at lower multiples than a lot of other businesses.
Yes, they do, and I think that creates buying opportunity, because there's a contagion effect during a shock event like a Brexit, where the South African financial services companies get pulled down with the UK and the European banks, but then it's almost like sanity prevails, and it says, but you know what, they are not affected in an operational sense to the same extent that they are maybe in a market or share price extent. And that's where I think when the prices have fallen, that's really where the valuation argument comes through. And especially when you look at the dividend yields, which we don't see really falling away anytime soon, probably in South Africa going to be in an environment like many other places in the world where interest rates will not have to rise very, very quickly. Those all sort of favour banks and financial services. And that's why I think they do present good value at this stage.
So are you going to go hot or not on either of the two? And are you hotter on one than the other?
So I definitely prefer the Satrix FINI 15 in this context.
There's less UK exposure.
Exactly, and especially that UK property exposure concerns me, because you spoke about those big financial institutions in London that might very well be moving their head offices outside of it. That is going to affect those big UK property companies, and also the financial services like Vestact and Old Mutual, which has bigger exposures to the UK.
But you're still hot.
Satrix FINI 15 is definitely my preferred one in this case.